The classic seasonality uses statistics to forecast the performance of a market in a single year. Is the blue line on chart and shows the average performance of Apple in this example from January to December. It shows its average trend during the months of a year, and from 1981 to 2016, for example, Apple rose 26% each year. The red line is the Apple price performance during 2017, and as you can see, Apple is extraordinarily correlated to its seasonality. Not always a market follows the seasonality as well as Apple is doing in 2017. The golden rule to use successfully the seasonal forecast without watching any other chart is that when the price is following its seasonality for so many more months, the more powerful is the seasonal forecast, because price is more likely going to continue following it. So Apple price is likely going to rise in the coming months. It's possible to add other seasonality and performance lines by clicking the Edit Chart button. Now I'm adding the seasonality of the last 10 years, so from 2007 to 2016. I click Apply and the platform will add the new line and histograms in all the following chart excluding the last one. The detrended seasonality line is built using the classic seasonality and is more useful to identify better on chart where it's reasonable to expect a maximum or a minimum of the market. It is calculated after drawing the linear regression line of the classic seasonality, so each point of the detrended seasonality is the distance between the classic seasonality to its linear regression line. The percentage of positive months chart shows how many times a financial symbol rose in a month, from the starting price to the last price of the month. For example, from 1981 to 2016, the darker blue histograms, Apple rose 75% in October, so 27 times out of 36. And that from 2007 to 2016, it rose in October the 80% of the times. There could be months when the price of a market follows a precise direction, bullish or bearish, even if the price is not following with high correlation the seasonal forecast like Apple is doing in 2017. The monthly average performance chart shows the average monthly performance of a financial symbol in a period of time. For example, from 1981 to 2016, in September Apple declined 4.35% and in October rised 6.98%. And in the last 10 years, for example in March, Apple rised 7.84%. The average volatility chart shows the average Apple price excursion on each single month, that is the average percentage distance from the lowest price to the highest price of the month. For example, the average volatility of Apple from 1981 to 2016 was in October 29% and in November was 20%. In addition, the chart shows that in the last 10 years Apple had a lower volatility than the whole history one, because the light blue histograms are shorter than the darker blue ones. The volatility is useful information for option trading and also for directional trading, because it's better to trade in a month when the average volatility is not too much bigger than the absolute value of the average performance, to reduce the risk of performance variance. The ForecastCycles signals consider this risk, so the best symbols in the ranking are even the ones with the highest performance volatility ratio. The equity line chart shows the result of investing in the selected financial symbol in the whole history in the current month. This equity line shows the result of investing in Apple since 1981 each October of each year by buying Apple stocks the first day of October and selling them the 31st of October of the same year. So this equity line of Apple shows that an investor who had bought $10,000 each October of each year from 1981 and has reinvested the profits in the following years, in 2017 its portfolio excluding fees would be $76,000. To identify a strong bullish equity line, I watch how much the equity line is steadily rising over much time with a low drawdown. With these conditions, the strategy of investing in this month will be stronger. For example, this one of Apple is a good bullish equity line suggesting to buy Apple in October. This equity line of Amicus is for sure not a good bullish equity line, but it is a good bearish one because it has been following for 10 years. So October is historically a good month for a short selling strategy of Amicus stocks. Instead, this one of Micron technology is neither a good bullish, neither a good bearish equity line, because it's bearish but just in the first years, and then from 1990 it has a lateral trend.